Hi Rupen, good to be speaking with you. A very good afternoon. And Rupen, firstly help us with your take on the overall market sentiment, because 2025 there has been a change in the narrative how you look at the emerging markets and especially India. The March has been quite a volatile month for us, though we are cheering the recovery from the lowest level, but the harsh reality is that in this mid end of the market, there are pockets where we might not see the stocks recovering back to those 2024 high levels. Give us your sense on the markets right now. Is it the time to deploy more or rather be selective?
Okay, hi, afternoon. Purely from a market perspective, in the very short to near terms, sentiment and liquidity determines the market movement. And and both of these change very fast. So as rightly, I think just earlier your colleague was pointing out, probably on March of 4th, we were worst as far as the sentiment and liquidity was concerned. So while liquidity has not changed, but definitely in last 2 weeks or so, sentiment has changed. And why has the sentiment changed? Purely because I think one of the key thing which was ailing uh, emerging markets and India in particular was strong dollar. So now in last 2 3 weeks, it is very clear where the way US and President Trump is looking into that the dollar is something which is going to be weakening, and which is what we are witnessing, and that has led to improved sentiments towards the liquidity as far as the emerging markets are concerned. Coming back to the main point, while the shorter term is determined by liquidity and sentiment, which at a margin has changed in last 2 weeks or so, fundamentals drive the market over longer term. And the key reason why the markets has witnessed correction was, the significant deceleration in the earnings. So while the earnings growth was pretty strong till FY24, that earnings growth has come down to 5% for first 9 months. And there are reasons attached to it, be it slowdown on expenditure on the government side, be it excessive tightening from the RBI side, and at the same time the sentiment specifically on the urban side, urban consumption being a little bit muted. So what's happening at a margin now? All the three factors are reversing. We are seeing government coming back and spending. So we saw record spending on the capex side by government in the month of December. January was better on a YOY basis, and RBI clearly has now given indication to the market that it is ready to support with liquidity. We have seen a lot of measures to support liquidity. Almost 7 lakh odd crores of liquidity has been infused. At the same time, on the regulatory side also, they have given indications that now they want to loosen a little bit of tighter regulation which they had put specifically on lending towards NBFC and the retail lending side. So that is changing, and plus budget has given a boost on the consumption by way of tax relief. So all three factors are changing, which probably from a 5-6% earnings growth, what we believe in FY26 will go back to 12 odd percent earnings growth. So hence we are seeing a classic bottoming of the market, and recovery will be slow, will not be as significant and fast as what we have seen in the previous cycle, but probably market looks into the rate of change, and at the margin FY26 is going to be significantly better from an earnings perspective vis-a-vis FY25.